So the US Federal Reserve has cut interest rates there by a quarter point at 2 p.m. And the price of the US dollar is already being adjusted for on international markets as other currencies, other foreign currencies have begun to gain strength against the US dollar. In cutting rates, what the US is doing is they're increasing domestic money supply, which then devalues in a way the US dollar because there's just more in the system that can meet the available demand. Uh, this provides Julio Velarde an excuse to do the same thing in Peru to cut rates to keep the sol in line with the dollar. Currently, the sol is trading at around 3.87 soles per US dollar, which puts it in a good position. It also means that the price to produce a rate cut has already been accounted for in the market, which is very good. It means that there's really nothing to lose if you were to cut rates. Uh, the US dollar does represent a significant amount of trade that occurs in Peru, which is why it's so important to keep the two currencies in a close relationship with each other that is consistent and stable. Also, there are some neighboring countries that have started to collect the sol as a sort of reserve currency, a backup to their US dollar reserves, because it has proven to be such a consistent currency in South America. Countries that are doing this include Bolivia and Argentina. So you also need to look out for regional trade as well as your domestic trade. You want to make sure that that stays strong and that your neighboring countries are also able to meet demand and have stable economies, especially around their reserve currencies of choice. This is also good for Peruvian consumers. So, as I think a lot of people are aware, Peru tends to run a lot on credit for people to purchase consumer goods. Because wages do stay low in Peru, it makes it sometimes difficult to buy consumer goods, and that means that a lot of consumer goods are purchased on credit. If Velarde were to cut interest rates, that would then reduce the cost of borrowing to purchase those consumer goods, which would then increase the amount that Peruvians are spending domestically on consumer items, which then assists the Peruvian economy and may also help some businesses like sort of steer towards formality, as well as helping the more formal businesses, including the larger conglomerates that do exist in Peru. So you can see more sales from places like, say, Falabella, Plaza Vea, those types of establishments where they are formal, large corporations that employ many Peruvians. That's a good sign because it should mean with increased profit from those businesses that we see either expansion or some minor wage inflation down the line as the cut to the interest rates and the increase of soles in the system gets adjusted for.